Okay, hello, good evening, guys. So welcome to the Nimbus Capital usual our chit chat session lah. So normally, right, for those who are new, normally this session happens every Friday 9 to 11 p.m. lah. So what we do is we just sit around, look at what's going on Bloomberg, and we see what are the stock price that moved recently, and then we usually do this until like 11 p.m. So we kind of eat into the US market opening hour also. So we will take a look at what's going on when the US market open also lah. Okay. So it's kind of very casual, very chill. I don't really have a structured content to sort of share during this kind of session. So it's very random lah. But for today, right, is slightly special since we are opening it up a bit to the public folks, right? I will do a slightly more structured version, but it's not usually what we do lah. So we have two meetings every week. One is this meeting that happens every Friday. In this case, it's Thursday lah, because tomorrow is a public holiday. But the other one is every Saturday. That is our usual weekly webinar where we have a more structured approach lah. So usually this session is a little bit more casual, a little bit more see how it goes kind of. Okay, so let's start off by sharing some of the basic stuff first, since we are getting into 2022. Actually, the first quarter for 2022 has passed, and it's like quite a, I would not say a good quarter. It's quite a bad quarter for the market, but personally for me, or I guess for those who are trading with me together, right, we should be okay. We should be doing okay. I myself is doing reasonably well for the first quarter lah. So we will give you like a heads up to what is going on with the general market for the entire of 2022, and perhaps you can prepare yourself on how to trade the market in 2022, because it's going to be a very bad it's going to be a very hard trading environment. Okay, we are no longer living in the 2021 the close eye buy anything also profit that kind of market already. The Federal Reserve is going to shut the tap off. The money supply is going to be sort of no longer present in the US market. So you have to be very careful on how you are trading during this period, especially if you're a trader. Even the investor, right, you're going to feel the pinch, because most of us, I'm sure most of us who started trading, investing, right, usually start during 2020, because after the COVID-19 market crash, and during that same time, brokerage like Tiger lah, Mumu lah started giving out a lot of free shares, and then it was also one of the best time to start trading also. That combined with all this huge amount of marketing by all the brokerages, right, I can safely say that majority of you probably started trading in 2020 and 22 right now lah. So if you started back then, right, you probably will have feel that, wow, trading so simple, like profit, like buy what also profit, buy this profit, buy that profit. But when you hit the early 2022, from 2022 January, right, maybe you might notice that all your so-called trading strategy are no longer working. Something happened. Not sure what happened, but something happened. Something happened to your trading strategy. Well, whatever you learn on the internet lah, YouTube lah, wherever course you go, suddenly everything is not working well already. It's like the whole market dynamic changed like that, and something has changed lah. Okay, so I'm gonna give you like a quick rundown to prepare yourself for the entire 2022. It's like a very high level sort of advice lah, but when you want to go down to the specific, right, of course you have to go and do your own homework lah. Okay, so let me just share something. I'm not sure if any of you saw this video. It was shared on February 1st of 2022. Okay, 1st of February. It was a public video lah. It was shared in my Telegram group, and based on the view count is a terrible view count, okay. But within this video, I have already outlined how the market is going to be like for 2022 and how you can prepare for it. But for everyone's sake, right, let's go through some of the key point in that video here lah. So when we look at US market, S&P 500 or whatever, right, you can see that from the early 2020 onwards, when the market crashed, after that COVID, after that we kind of like recover, right? It seems like we have one of the biggest rally that we ever see lah. So within 2020 itself, you can see S&P retake the previous high, okay? So market crash on 21st February 2020, and then it retake the high in August 2020, and then it dip a bit, but after that, by the time we hit November 2020, right, we sort of like rocket past that level lah. So this is something that is almost unseen in trading history, mainly because when the market crash here, right, this one we can, it is technically it is a recession lah. So in a technical sense, right, we do face 2 quarters of GDP decline, and we went briefly into a technical recession mode, and then after that there were a lot of government support, government stimulus, all the money printing, helicopter money left and right, through here, through there. The market just zoom off and recover immediately. Just to give you a quick reference, right, back in 2018 and 2019, if you have been trading here, right, from the beginning of 2018, market sort of went into like a stagnant mode, and it actually takes from 2019 all the way until like somewhere to the late 2019 to truly recover. So this is early 2018 to late 2019. It takes actually 2 years. It takes actually 2 years to like truly get off from the 2018 high. So imagine you are someone who sway investor at the top, meaning you are stuck there until like 2 years later, and then the market actually kind of like recover, but it recover a bit, then crash again lah. Okay, so so the key thing here is back then, right? Back then here, market wasn't really in a recession mode. In fact, it wasn't in any form of technical recession. It is just that during that period, there wasn't any form of stimulus money from the government lah, okay, from the US Federal Reserve lah. So it was very hard period to trade through also. If you are a trader during this period, right, I'm sure you can remember all the nightmares lah. Okay, and another period was way back in 2015. Okay, 2015. Imagine you got stuck here at 2015. It will actually takes you all the way until like late 2016 before market truly recover. So in the same way, right, it takes about 1.5 years lah, 1.5 years. And in fact, this period, there wasn't any form of recession also. It was just a normal market period. Nothing going on. But here in 2020, even though we have a crash and a recession, right, we take less than a year to actually recover, and not only recover, right, we double the return. We double the return within the next 1.5 years. So the key thing is right now, we are not going to see this 2020 to 2021 pattern again. We are not going to see that maybe in the next 5 or 6 or 10 years lah, okay? So if you have made a lot of profit during this period, and when market kind of like correct during the early 2022, I do hope that you manage to retain most of your profit here lah. If you gave away all the profit from this period within this little short period, right, most likely this opportunity will not come again lah, okay? So it is a good time to go and reflect a bit on why do you lose money, or is it like you did not manage to capture enough profit, and then here you sort of like didn't really follow your risk, or you double down, or I don't know, like you go and do your own reflection. Okay. So now why is it happening? Why do I think that this is never going to happen again? And the key thing is, going forward, right? The market is going to return to the 2018, 2019 kind of period. So you are not going to like see this recovery again. No more. Okay. So what you're going to see is probably something like this. It can go up, then it will like come down again, then go up, come down again, then sideways, then maybe continue to go up. So it will be more of a sideways movement like this you see here lah. So even though it is sideways, right, maybe towards the end of the year or towards the end of next year, we will still be able to see a positive growth. We will still be able to see a positive growth, but it is not going to be aggressive like 2020. Or it can be something like the 2015 period where everything is sideways lah. Okay, so if you are someone who is stuck here, if you sway go and buy everything at this period, right? I think you're gonna stuck there for quite some time now. Okay, I think you're gonna stuck there for quite some time. I personally do not think that at the end of this year we will be able to hit this 4,800 level again. Maybe it can hit, but it will be like this kind of pattern lah. It will probably like this kind of pattern where it will hit a bit and then after that go down and then go up and then go down, and then maybe by around end of 2023 or mid 2023, then it will recover like that. So the of course the question is why do I think that? Is it like a raw feeling, gut feeling, the feeling dropped from the sky, or Jim Cramer messaged me, or what's going on? So of course the key reason is that, number one, the Federal Reserve is gonna cut the rate, and secondly, of course, we have the huge inflation issue that is going on. Okay, so let's take a look at some data. Okay, let's take a look at some data. So this is my own macro data that I keep track of myself. What I want you to look at is, I want you to look at the M2 column. M2 is referring to the M2 money supply. M2 is referring to the M2 money supply. Okay, so the amount of money supply that is available in the market. So you can see that the date that I have is from November 2015 all the way until the current lah. So actually the the March data should be coming out soon. So you can see that for the entire 2015 to like somewhere around 2019 like that, right? The money supply is relatively flat. You can see from the heat map, the M2 value is increasing. The amount of money supply in the market is increasing, but it is increasing at a very, very slow rate. So back then, right, the Federal Reserve policy of buying mortgage-backed securities lah, or the treasury bonds lah, is not really very as accommodative as it is right now. And in fact, back then, the interest rate was somewhere around 0.91 or 1.04, 1.15%. Okay, currently the interest rate is still at 0.05. It is still very low. So during that period, the money supply in the market is very, very dry. And then what you will notice is that when COVID-19 strike, when the stock market crash, there is a sudden release of M2 money supply into the market. You can see that during this period, the M2 money supply increased by 3% on March 2020, it increased by 6% on April 2020, and it further increased by 4.9% on May 2020. So within 3 back-to-back months, right, the M2 money supply increased at a rate that we have not seen before. So if I were to go all the way back to 2015, right, most of the time the supply rate is increasing by only like 0.47, 0.25, 0.3, 0.11, 0.09. Then suddenly we have a 3%, 6%, 4% back to back. And not only that, we also have the Federal Reserve rate cut until like from 2.04% all the way back down to 0.05%. So because of this, right, you can see that from this point onward, from 1st of May 2020 onwards, right, we can see the stock market shoot up all the way. So 1st of May is like somewhere here. Okay, from this point onward, stock market shoot up all the way. If you came in here, as long as you buy the dip, you close eye, confirm earn money lah. But now we are hitting this period. I call it the heart shape, the heart shape dive lah. Okay, the heart shape dive, the McDonald dive, the McDonald dive quite common lah. In fact, it happens here before, and somewhere here also. Okay, so let's look back at what we are facing here right now. Okay, so when we look back here, currently at this point, I have not updated the data yet, but we can see the money supply start to decrease already. Okay, the rate of money supply is going back down. Even in January 2021, right, we have 1%, 1%, which is something that in the past we don't really have. The Federal Reserve was still very accommodative, but now is gonna reduce, and Federal Reserve also say that they are gonna reduce even further towards until the end of this year lah. And not only that, they are gonna raise the interest rate until the end of this year. So there are about some say there will be 7 rate hike, some say there will be 5 rate hike. So the consensus is between 5 and 7 rate hike lah. Okay, so along with the rate hike, right, the money supply is gonna be removed drastically from the market itself. Federal Reserve want to reduce their balance sheet, so it's going to go on for quite some time until the inflation come down, and then that will probably take 1 year, 2 years, who knows. So for the next 1 year or 2 years, right, you are not going to get a very nice market like this already. You are going to get a very choppy market. So for a choppy market, right, what can you expect? What are you supposed to do? If you are an index trader are all the CFD index trader, all the triple Q, or the SPY. And if whether you are a CFD trader or you are trading on margin, you are trading the options, or you are a dollar cost averager that is just looking to like invest lah, just a monthly dollar cost average, right? You will realize that your return is not going to be very, very good already. It won't be definitely not as good as the past 2 years, especially if you are a short-term index trader, right? You're going to have a very, very rough time, because every time you try to like sort of buy the resistance, it's gonna like suddenly dive down. Or if you try to pick the bottom is always volatile. It is gonna swing by like 2-3% within a single day. You can see that the bottom is very, very volatile. And then if you try to pick the bottom, right, and you have a very high leverage, very high CFD, right, you are not gonna able to hold your position, and you probably gonna miss the run up. So the chances of you getting whipped left and right by the market is gonna be very, very high. And the thing is, even if you get a very nice position in, right, most likely you might find it hard to hold your position, because maybe here you scared that jalat, like better sell first lah, later dive again. Imagine you get your position here. Most of the time, if you did that, right, then you're gonna miss this whole stretch. And then sway like break resistance, you go and buy this gap up, right? You're gonna face with this kind of thing. And there's a lot of gap here, gap there. So it is very volatile, and it is not volatile in a good way, because it's gonna gap up, gap down. You don't really know what's going on. And as a CFD trader, you're gonna be fighting against this very choppy yet volatile market. It's gonna be very bad. And for the dollar cost averager that is just looking to dollar cost average and hold, right? I mean, you for your case, you are most likely like it's an effortless thing lah. You are not doing any work lah. You are just dollar cost averaging, but you will also realize that it might take quite a while for the market to break back the all-time high again. So it's not going to be the same as 2020 and 2021. Okay. So if you are feeling that how come this period very hard to trade, the Q1 of 2022 very hard to trade, or if you are looking at your investment portfolio, you realize that like how come all the counters that I previously buy all chung like very nice, all the big tech, Tesla lah, Netflix lah, all those stuff, right? They are now quite they are now underperforming, you will realize that it's very hard to make profit really. So what should you be doing? If you cannot do all this, right, what should you be doing? Actually, there's a lot of opportunity in the market. The index is not the only thing that you can trade. There is 11,000 or more stock in the US market, which is available to you. And actually, there are a lot of stocks in the US market that is either going one direction up or going one direction down. So you can either short those going down or short those that is going up. You will not get caught in the index like what you are seeing here right now. Okay, so let me show you some of the counters that we personally have traded, we personally are looking at, or we have a position in. Market open already, haven't? Soon, gonna open soon. I suddenly see the S&P went green. Okay, so let's take a look at some of the counters that we have traded and we sort of recommended, or we are kind of like looking to enter those kind of stuff. Okay, so ChemEco is a uranium counter that was, it's a theme based on Russia conflict, mainly because if we are sanctioning Russia, right, most of our uranium are coming from Russia, Ukraine, and all the Russian allies. So it has been going up as early as January 2022. So of course, I mean, we didn't really get it way back then, but we got it somewhere around here. And in fact, until right now, right, we probably are up about like 10-20%. So these are the kind of counter that you definitely have to go for. And of course, all the energy counters, although all the oil and gas related counter, but oil and gas related counter, right, we don't even have to go into US. We have those counter at the very home that we are living here, or the Singapore counter. We definitely have golden energy all the way from like here. We have golden energy from here, and I think we have another round somewhere here. And not only that, we also have Rex International quite some time back, hit the TP, and then now resting. Now we can go for a second round. We also have RH Petrol Gas to make good use of all the oil counter that is like, oh wow, okay, this one showed up until very high. But until the most recent one that we kind of mentioned is also Semcon Marine. It's a very speculative counter. We also somewhat mentioned YZJ also as an alternative to Samudera. Samudera is like very too fast, too high. But of course, once in a while, we also hit some stop loss. For example, we have a short position on Propnex. We are aiming for higher interest rate, lesser housing sales, but it seems like Singapore very resilient. So we were hit with the stop loss on Propnex also. But you can target specific area, specific sector to play a long position or a short position, instead of targeting the actual index itself. In fact, we also have some profit on Golden Agri Resources from last year. Palm oil is doing quite well. Also, it is a slow and steady upward. Okay, then back to the US side, we have things like Archer Daniel Midland that is focusing on the soft commodity, also Russia related trade setup. And recently we have Peabody Energy for those who are interested in coal also. So this came out on our scanner, and it is something that we can enter if you somewhat miss the golden energy run also. So we have a lot of counters that if you are looking to long, right, it is going one direction up. It is like how previously your tech sector are behaving, rather than you go into those tech sector and you get like whip out by all the up and down movement. Then at the same time, we also have short position on certain sector like the home builder sector. So the home builder sector in US, they are facing quite a bit of supply chain issue, and with all the interest rate and inflation going up, right? Of course, we feel that they are gonna reduce their spending on things like home furnishing or even like home renovation, all these kind of things. So we have short position on counters like pool. We shorted like somewhere around here. It is slowly going down, and we are looking for more downside. And some managed to get first builder first source from all the way here. So these are specific sector that we are targeting. And the most recent tech counter, the very first big tech counter that we targeted for short is actually Amazon. We got the short position at somewhere around 3200, going well, but currently recover a bit yesterday, although I'm not really gonna like panic over this big green candle, but we see how it goes. Okay, we have our own trade plan. And aside from that, we have also, among other stuff, right, we also have a snowflake short. Snowflake short, we actually shorted here. We got cut off here, but we shorted here again, and we managed to get the whole journey down. Our initial shot was too early. We got we got too excited, we get cut off, but we managed to re-enter again. Of course, one of our star, the most well-earned short trade was actually Rivian. Rivian, we managed to short from here, or I managed to short from here, and then all the way down to like $40, and towards the earnings season around $30 like that. So this trade within that very short week, right, it is about 40% down within just 2 or 3 weeks. And you don't need to go for all the usual tech counters and usual S&P, triple Q, all those stuff. You don't really need those. And of course, the lesser well-known short is also the children play short, which we shorted at $70. And currently it went all the way down to like $47. That's like 30% down. But recently rebounded a bit, and it is still a 22% down. So it's one of our short also. And another short that we have is, of course, Starbucks. We also shorted Starbucks all the way from like $90 plus to currently this level now. So in fact, Starbucks give us a very good, like, hit profit, give you second chance, and then hit profit again. So there is definitely a lot of opportunity out there. Okay, it is just that whether you want to take those shot or not. So with all this said, right, of course, you need to know what to look out for. You need to know which sector to target, and within that sector, right, you need to know which specific counter to target. It is not that we are always right. There are some trades that we got wrong also. I'm not sure recently what is the latest trade that we got wrong. Let me go and check. Let me go and check my trade ideas. I think you guys should have seen the fastener. Okay, fastener, yes and no, because fastener, right, I wouldn't say we got it wrong. If you exited, right, then it is a very minimal loss. So we have a short position. If you exited, right, this gap up is only like a 1% gap up. 1% gap up, so you will probably suffer a very minimal loss, but I am still holding on to it. I'm personally still holding on to it because stop loss really have not reached yet. So I did mention that, like, if you scared, you can run first, but if you want to hold on until the stop loss is hit, right, it's up to you also. But I believe that I will hold on to it. But personally for me, right, since I am playing options, I'm playing the put options, right, the amount that I can risk is my options ready. So I mean my risk is set ready. So I'm just gonna let that option run. So I'm not I personally won't be exiting my option. So I'm just, this one is still, I would say, not so bad. Not so bad. Let me check my trade list. Yeah, great. Yeah, so if you can afford the risk, right, if your risk is there already, I think you can hold on to it. So it's quite I would say quite low risk if you are holding on to it. But sorry, let me find where's my where's my trading list. Okay, my trading list is here. What are the stuff that recently hit stop loss? Propnex was hit with stop loss. CrowdStrike. So recently, CrowdStrike, we were hit with a stop loss also. We entered here. We tried to play the earnings. We entered here. We tried to play the earnings. So we were in profit for a while. We tried to play the earning, but the earning gap up, right, and then we were out of the trade. So it is somewhat like fastener like that. The trade setup is here. We entered there, tried to play the earnings, but we were cut off and then it went all the way up lah. So even after the gap up, if you decide to hold, right, of course, you should definitely cut your loss after the stop loss level lah. Okay, so these are all the trades that we share within our group. We give you a proper direction, but not just share the trade setup and then close eye go and trade like that. But I also provide a lot of market direction, things that you need to take note of so you don't like do things very blindly like that. Okay, so that's what we are doing every week. So we share our market outlook, we share our trade setup and how most of the trade setup are going within that particular week. And for sessions like this, the weekday sessions, right, we just very random, chill, very chit chat lah. Okay, so with all that introduction being said, right, let's just quickly look at the market and let's see what the hell is going on recently. So market already open. Let's go through the S&P 500. Okay, let's go through some of the S&P 500 technical analysis. So currently we are like right here. This is a short week. So short week, right? Given though we have a short week, the market is kind of like quite volatile, mainly because we have all the inflation data that came out this week, and not only that, we have the banks earnings that came out. Actually, all the big banks earnings came out already lah. We have Goldman Sachs, Morgan Stanley, Wells Fargo, Citibank. I think Bank of America haven't come out yet. JP Morgan Chase also come out already. So because of that, you are if you look at it, you are seeing the Monday to Friday price action like this. Okay, but the thing is that it's a sideways price action. It's not going up or it's not going down. We have a very sideways price action. Of course, if today price action managed to go up and close high, good lah. But if today price action come back down here, right, then we have a very sideways movement. And if you look at the movement here, right, it's about 1.8% up and down, 1.8%. So it's 80 points movement. I believe it's quite volatile. It's a quite volatile sideways movement that's happening. So if you are someone trying to like short or long here, trying to play the index, right, you will find it very quite hard. Even right now, right, it's very hard to tell that this is going to be a support and shoot up, or if this one is just gonna come back down like this. Because if you look at the chart here, right, if you look at the chart on Tuesday, you will be very confirm guaranteed chop. Wow, this one confirm go down. And then when Friday comes around, you will be like, oh shit, man, it's gonna recover. And then who know what's gonna happen today lah. Okay, so it's a very choppy market to trade in. And if you are trading the index itself, right, I will say good luck lah. I will say good luck. You will find it very, very hard to profit from trading the index lah. Okay, so the key thing here is not to chase individual candle, okay, not to become bull or bear within individual candle. It's very common. I see people doing analysis, right, doing all the fundamentals, talking about inflation data, and then talking about employment rate, all this and that, and then suddenly see one bearish candle become, oh, market gonna crash, and then suddenly see one bull candle become, oh, we're gonna recover all-time high already. Like it doesn't make sense at all. So you have to be very, very careful. Okay, make sure you have a general direction. For us, right, our general direction is sideways or going down. We are not looking at 4,800 anytime soon. So that is my personal bias. Whether you chose to endorse to it is it's your choice. But the thing is that whatever action, whatever trade that I'm putting up, right, it is with this 1 year long-term view in mind. So because of that, I am not gonna chase all the resistance breakout like this. In fact, I rather let the rally go and not trade it. But whenever I see any form of retrace coming in, right, or whenever I see some weakness coming in, I'm not gonna short the index, but I'm gonna specifically target certain sector that are doing very bad, and then I'm gonna short those sector. For example, Starbucks. So why Starbucks was chosen to short? Why Amazon was chosen to short? Because all the retail spending now is like the retailer consumer spending power is getting lower and lower due to the interest rate going up, and due to all the inflation right now, a lot of US consumer, they need to spend more on things like gas lah, food lah, rent lah, all this kind of things. So because of that, they'll probably have lesser time buying a Starbucks coffee or they probably have lesser time shopping on Amazon Prime. So due to all this, of course, for those who know our Amazon trade setup, you probably know even more lah, but I mean that I'm giving you a general direction lah, okay? So when I'm looking to shop, I will definitely go and shop those counters lah, like Starbucks like that, or the children place. The children place is a retail store for children apparel and footwear lah, okay? So these are the kind of sector that I'm going to shop. I'm not going to come here and short the S&P 500 here. It is like asking for death. It's like asking to get whipped out from the market like that, okay? So you can even see now how the market is now sliding back down already lah. But even if you decide to play the index, right, don't look at individual candle, but rather look at key levels, okay? Look at very important key levels. So in this case here, right, it is very obvious that the key level is somewhere around 4,500. The key level is here. This is the key level, mainly because, right, it tries to recover, it tries to close the gap, but always close down. And then it tries to close the gap here, it's always closed down. And then after that, next day, it kind of like jump all the way down. It gap all the way down. So as long as this level is not taken, right, this 4,500 level is not taken, you might not probably want to go for long position, because what can happen is, let's say you see this engulfing candle and then you buy because you saw this engulfing candle, right? What's gonna happen is, it can come up here, it can go up like maybe 50 points, and after that, it's gonna probably hit resistance and then come back down here lah. So you need to ask yourself, is it worth it or not? Is it worth it to go and buy this trade for that 50 points? Because the risk is that, who knows, you buy here right now, today is gonna maybe dive all the way back down, especially when we are in the earnings season where things are a lot more volatile. So I'm sure you guys have seen on the Telegram itself where I mentioned that this week is going to be very volatile, right? This is the kind of things that I'm talking about, where at one moment you think like the market is gonna go down, crash all the way already. It's like, this is a very clear cut, confirm you shop here, get money all the way down there already, like very clear cut. But what happened is, no, it kind of like cheat a little lah. And in fact, if you sort of short this candle, right? If you short this candle on Monday, or this a Monday, you probably get scared on Tuesday already, because it actually rally it gaps up and rally upward before it start to dive down towards the end of the day lah. Okay, so we are actually looking at a very, very volatile market, and you want to be extremely careful. The worst thing you can do in this kind of situation, this kind of market condition, right, it is to revenge trade. Do not revenge trade. If you revenge trade, you are gone for good already. Revenge trade, as in like, you try to short, you short here, and then you scared, you gonna whip out and like this one very common. This one very common. And for those who are guilty, right, you can speak up. I won't judge you. But I will judge you silently lah. Okay. Okay, so let me show you the kind of things that can happen. For example, okay, here, let's say you short here, okay? Okay, I'm gonna go into a 4-hour chart lah. No, never mind, I think daily chart. Let's say you short here, you short here on Monday, and then when Tuesday come, right, you cover your short. Because Tuesday, the market open, gap up, and then went all the way to the top. And then you were like, shit, die, better not short, better cover. And then you very happy, you cover back. Then what happened was Monday you wake up. Hey, you see, yeah, should have held on to my short. So what you do? You go and make another short again. And then what happened when you make another short? You kena this one, you kena this candle here. You kena this green color candle here. And what happened? You kena this green candle, and then you think like, or engulfing candle should recover already, you go and buy here. And then now, today, the price action is giving you this. You'll be like, shit, how. And what happened is, you get caught within a sideways movement on a short weekend. So it happened very common. It happened. So instead of go and fight with the market maker in an index, right? You might as well short or play short or play long on a very clear-cut counters. Very, very clear-cut counters. So one of the counters that I can think of is Peabody coal. So there's a lot of sanction happening on Russia coal. Euro and Japan already sanctioned on Russia coal. So because of this, right, maybe, and it is already a very nice uptrend. And you can see some of the major resistance broken already. You can see that there's a lot of consolidation being done, and then now it just shoot out, right? You can actually go for this kind of counter. Just play small, put your stop loss, and then just see how it goes. It's gonna go up. Or you can even play those very solid uptrend counter like Archer Daniel Midland. Not really. Sometimes, most of the time I will go for breakout, but there are times where I YOLO a bit lah. YOLO as in like I will play the support also lah. But most of the time I will go for the breakout. But for short position, right? For short position, I tend to short the top sometime lah, not always. Okay, this risk reward ratio is a very broad topic that it cannot be explained here lah. Okay, it's a very broad topic because there's a lot of misunderstanding on risk reward ratio, and it is something that it's something that I can talk for 3 hours lah. So to in order to explain it, so I'm not gonna explain that, but we sometimes get 1 to 2, sometimes 1 to 1.5, or sometimes 1 to 3. so it's really the key thing here is we have to take what the market give us. Just because you go and, like, for example, let me give you a scenario. Okay, let's say you want to play Archer Daniel Midland. So this is the trade that we got all the way from here lah. Currently now it's like sorry, this one we got all the way from 72, currently now all the way at 19 already. Okay, so you realize that it already passed the TP level. So imagine that you are here, you make your trade here, and then you say you want to go for 1 to 2, but the thing is whether you get your 1 to 2 is dependent on the market can give you 1 to 2 or not. If the market doesn't give you 1 to 2, right, then you're not gonna get 1 to 2. So the key thing here is you need to look at your risk reward ratio in 2 ways. One is your planned risk to reward ratio. So of course, when we plan, we need to plan realistically also. There can be situation where you have things like, for example, I'm gonna buy here, and then I'm gonna set my stop loss here, and then I'm gonna put my TP there, and then that is a 1 to 10. That's a 1 to 10. But the thing is, can it give you a 1 to 10 or not? What is your actual risk to reward ratio? So whatever you plan, right, is not really what you have at the end. So at the end, what is your actual risk to reward ratio? So the thing is, sometimes I will buy here, exit here, and then re-enter again, and then exit again, and then I will keep riding the trend. Then what is my risk to reward ratio? Because along the way, I will have shifted my stop loss. My stop loss is already now my risk is 0. So it's my risk to reward ratio infinity, because now my risk is shifted to break even. So it's not an easy topic lah. Okay. And we don't purposely have a very tight stop loss so that we can like boast, oh, our risk to reward is 1 to 10, but end up most of the time you're not going to get 1 to 10 also. From Fairly, sorry, I don't understand why a company affected by sanction will be bullish. Oh, okay. So the thing is, for example, let's look at coal, since we are talking about coal, right? When Euro sanction coal from Russia, right, meaning they are no longer buying coal from Russia. So when they don't buy coal from Russia, they need to buy it from somewhere. And most likely they are going to buy it from US lah, or they are going to buy it from somewhere within their Euro nation lah. So whatever coal company within Euro nation, you will see the coal counters running up also lah. In fact, don't even need to be in Euro nation. We have Golden Energy shoot all the way up on the day that there was a sanction. We have Golden Energy from here went all the way up here just because there was a sanction now. Okay, So it doesn't just relate to coal. For example, uranium counters, like chemical, because of the sanction, right? It is going up and up and up because we have this particular sanction against Russia uranium. So if we cannot get uranium from Russia, right, we have to get it from local mining companies lah, and ChemEco is one of the local mining companies. How many trade do I hold at one time? About 10 to 12. I hold 10 to 12 trade at one time. Okay, all the tech counter going rate already. Yes, correct. As long as it's not a Russian company. So even I mean you can't trade Russia company lah. But I mean it doesn't have exposure to Russia lah. Let's look at the index. Okay, now it's rate ready. now it's going rate ready. Okay, so since we are in what do you call that, earnings season, right? Let's talk about the bank for a while. Okay, let's talk about all the bank stuff for a while. So the bank earning comes out already. So we have JP Morgan yesterday where the price gap down, and then we have Morgan Stanley today, price gap up, go up, and then now become like a, what do you call that? What do you call this candle? Shooting star, pin bar. Then we have BlackRock yesterday also. They posted quite a good result, but I'm not sure why is it red lah. But I mean, never mind. But Morgan Stanley is I call it positive for now lah. Okay. Then we have Wells Fargo's that dive 6%. Then we have Goldman Sachs, very positive result, gap up but now coming down. So it does seems like not they cannot hold the gains lah. So what's going on here, right? I can somewhat see a pattern here where if you look at retailer banks that are more suited towards peasant like us lah, more suited towards those middle income, lower income, or perhaps maybe the up. I mean, if you are a millionaire sitting in my webinar, I'm very honored lah, but I don't mean to insult you lah. Okay, so for example, we have Wells Fargo, JP Morgan Chase that is more targeted toward consumers lah. Okay, so these are the banks that didn't do really well. I mean, JP Morgan Chase definitely have their trader arms also, but they are not as I would say specialized as Goldman Sachs or Morgan Stanley lah. Okay, so maybe when Bank of America come out, we can take a look at how the result is. If Bank of America also gap down or what, right? Then we have like a very well concluded theory that those banks that are meant for normal consumers, retailer, they are doing quite bad. But whereas those investment banks that are aimed at the high net worth folks, right? They are actually doing quite well. Like Morgan Stanley and Goldman Sachs actually posted very good result, or all the very big investment bank like that. So it does kind of point to a not a very good macro situation where where the retailer are not really spending as much as they used to. They are not putting in fixed deposit. They are not taking out mortgage loan, and yes, correct, David, you are right. So it does affect all this normal consumer like us lah. Whereas banks like Goldman Sachs and Morgan Stanley, right, where all these rich people, they have all the money to put inside hedge funds lah, or whatever, they are still doing quite okay. So if that is really the case, right, if you think about it, right, then going forward, it truly means that inflation is actually affecting the consumer in US. And that is just the beginning only, because we just raised the interest rate by 25 basis points, and it's only like the tip of the iceberg. We are gonna raise like another 6 times this year, and they are talking about in May, right? They are looking at raising 50 basis points instead of 25 basis points. And if you think about that, right, what's gonna happen to all the US consumers where the interest rate went up and up and up, and you can see that their mortgage bills is going to increase by quite a big amount. In fact, in Singapore, it's happening already. If you look at news recently, right, MAS has actually tightened the monetary policy by a few times in a row already. And in fact, SGD kind of went up quite a bit. And in fact, if you are holding mortgage or using like the LIBOR, or most recently is SORA, right? SORA, you will see that in the recent month, you might see your mortgage rate start to creep up by a bit. And this is bad in terms of consumer spending, because let's say your mortgage is used to be 2,000 a month, and then because of interest rate went up, your mortgage is now $2,500. What's gonna happen is that now you have $5,000 that you can no longer spend. Your budget is cut off by, now you have additional $500 that you are no longer able to spend in the economy already. It's a $500 that you need to cut back. From what I know, they are gonna replace SORA with they are gonna replace SIBOR and LIBOR with SORA in the future lah. So I think in the future that there won't be SIBOR or LIBOR already. Yeah, so the mortgage rate going up is gonna affect consumer spending by quite a lot lah. And if we want to look at overall mortgage, right, we tend to look at the US 10-year government bond, treasury bond. So most of the time, your mortgage rate is pegged to this lah, not pegged lah, but it follows a very good relationship. If this one goes up, right, then your rate is going to go up also. So 30-year mortgage rate for US, right, you can see it's like it's a one direction upwards, and it's gonna hit them quite bad lah. Okay, maybe not in this quarter, maybe in the next 2 quarters it's gonna hit them quite bad. And if let's say all this mortgage rate go up, there will be lesser demand for house, lesser demand for mortgage, and the home sales in US might start to drop. So if you Google home sale and mortgage registration in US, right, you will see a lot of news article telling you that they are dropping quite bad. And that's one of the reasons why we have a short trade on the home builders, also the home furnishing, the home builder. So our trade actually have some backing with all the a bit of fundamentals plus technical. We try to target specific sector rather than targeting the actual index itself, because we can definitely find trades that is very suitable for us lah. Okay, and of course, when the government 10-year yield goes up, right? Just now it was like 2.6 something, now 2.7 already. So when the treasury 10-year yield go up, you will notice that the corporate bonds are also going up. So if you look at the AAA corporate bond, right, it is as high as 2020 pre-COVID-19 level. What it means is that now, even on a corporate level, right, if a company want to take out loans, or if a company want to issue bonds to like expand or to grow or to do whatever nonsense they want to do, they need to pay extra in terms of interest rate. And then because now they are paying such a higher interest rate compared to like early 2021, right? Now they are paying double the interest rate. It means that it's gonna eat into their profit. So because of all these things that is happening together along with the inflation, all this nonsense, right? That's why S&P 500 or the market in general, it is going to go sideways for a foreseeable amount of time lah. I mean, eventually it can still go up. So like maybe towards 2023, right? Maybe early 2023 or mid 2023, it can be 5,000. And you can come and say that, hey, Zor, you say market cannot go up, but now it's 5,000 already. But the thing is, it take 1.5 years to hit 5,000, when previously it will like take less than half a year lah. So if you want to maximize your profit during this period, right, you must try your best to be a good stock picker. Go and pick the correct industry, go and pick the correct sector to trade lah. Okay, so let's take a look at some other stuff that we are seeing. So I like to look at the industry, the sector industry, to see what is doing well, what is not doing well. So you can see that today it is the technology that's coming down. So speaking about technology, right, very funny. We have our Mr. Elon Musk want to buy out Twitter, and then gap up, and then now coming down already. But because he want to buy out Twitter, all those nonsense, right? Tesla is diving 2.7%. Tesla is diving. I have no idea what's going on with him, lah. Okay, I know there's a lot of Tesla fans, lah. I mean, I am not. I do not dislike Tesla. Sometimes I buy Tesla when it meets my criteria, but I personally dislike Elon Musk, lah. Although to a lot of people he's a hero, lah, but I personally dislike Elon Musk because the kind of thing that he's doing on Twitter, right? He's really causing a lot of retailer to get caught at the top, and it encourage trading behavior that are actually very toxic. Chasing stuff is very, very toxic, like chasing the Dogecoin or the Shiba Inu. I'm not sure if Shiba Inu related to Elon Musk or not, but I mean, you know what I'm talking about, okay? So I very much dislike how Elon Musk lah. So most of the time, his stock, right, Tesla or whatever stock that he touched, right, it tends to be very unpredictable also. So that's why I tend to stay away from certain stock as much as I can. So for those who are not aware, right, here, I'm sure here you know that Elon Musk or Tesla tweeted that they want to do a stock split. But the thing is they cannot do a stock split on Tesla. They did not meet the share requirement. They actually need to dilute first, and then after dilute ready, then they can stock split. But the thing is, if you need to dilute first, then you don't need to stock split ready. You already dilute. So what for you want to split some more? But it was a very weird thing. And the funny thing is that news came out on the same day that the Shanghai factory is closed down for COVID-19. So to me, it seems like they are trying to mask bad news by a stock split news that like isn't even really stock split lah. And then the market gap up, then everyone happy. But now what happened is the market already, Tesla price already go back down lah. And the thing is that if you are I don't know, like if you worship Elon Musk, right, you go and buy this, right, unless you quickly TP that, most likely you are holding a big loss lah. Okay, and you chase this to TP here, right? These are very toxic trading habits, extremely toxic trading habit, because when you chase here, there is no how do I put it? You are taking a very big risk by chasing here. There is no safe place for you to put a stop loss. Most likely you will chase without thinking about risk, chase a big position, don't even know where your stop loss, and then end up you get caught at the top loss. And if you get a very nice profit here, if you exit at the same time before this engulfing candle comes in, right, then you will consider yourself lucky, and then next time you might go and do that same thing again, but not every time you are lucky lah. In fact, there's something happened here also. I'm not sure what, but something happened there lah. Okay, so it does encourage his behavior, encourage a lot of toxic trading behavior from retailer lah. We finally have Amazon diving back down also. Snowflake is a counter that I'm looking to short. Seems like good seems like good to short now. I don't know. You can think about it. But the other day, I was having a one-to-one check-in with one of my course trainee, and then I was telling him that actually, if you want a short review here, right, you can go ahead lah. It's like peak here already, and it's kind of like a support turn resistant. I'm not sure whether he managed to short or not, but it is quite a. If you short here, right, it is about 18 to 20% down lah. Quite a good amount. Starbucks is still dropping. So I'm still holding on to my Starbucks short. Hopefully it can break through this lah. Hopefully it can break through this. Okay. So I want to talk about Amazon short. So for those who watch the video on Amazon short, or who are in our weekly webinar, who knows about the Amazon shorts, the theory lah, the theory and all the explanation behind Amazon short, right? if you get scared off by this green candle, and if you obviously you are in a profit lah, okay, and if you want to run because now your profit is like gone, then I mean that's up to you lah. You can run lah. But what I want you to think about is that the reason why we are shorting Amazon, right, is because we have a reason. And this move downwards, right? This move downwards is not due to our reason. This move downwards is just a broad market going down. Everything is going down, not just Amazon going down. Okay, so what I want is I want a specific trigger that makes Amazon go down only. Maybe the rest are not so affected. So the kind of stuff that I'm looking for is, if you remember situations like Netflix, you see how Netflix and Facebook, they get sort of what's that word? Decoupled from the FANG, they get decoupled from the S&P 500, where previously they moved quite in a good correlation with S&P, but after the earnings come out very jialat, they are like on their own already. And in the case of Netflix also, they are on their own already. So I'm not saying that Amazon will become like Facebook or Netflix, but at least I want a movement that is where that is Amazon is heading down, but perhaps S&P is still doing okay lah. But this movement here is not that kind of movement that I'm looking for. So the movement that I'm looking for, right, I believe it will only come out during the earnings. It is the earnings that will catalyze this particular downward movement lah. So it is a trade that I'm holding towards the earnings. Whatever happened before the earnings, right, I'm not gonna care so much lah. Okay, so the thing is that when you enter this trade, you will probably already know how much you are willing to risk. And if you already know that, right, then it doesn't matter whatever it is happening lah. It's fine lah, okay. And then we just go for it. Yeah, Tesla is very hard to trade. Correct. Yes, Megan, he's manipulating his power, and now he want to buy Twitter because I think he is like Donald Trump lah. He almost got banned on Twitter or something lah. I don't know. Robert, you can use CFD, but you can also short using Tiger lah. Tiger margin account. You can short using Tiger margin, because sometimes CFD brokerages like CMC lah, IG lah, all this, right, they don't really have a good selection of stock. I think for US market, they probably have good selection lah, but not sometimes, right? Sometimes we don't always aim the big names lah. Sometimes we will aim the small names that no one heard of, and then maybe those counter might not be present lah. CMC is, yes, CMC not bad lah. CMC quite okay. Archer Daniel Midland going up 1.33. So this one is the most. Mumu also can, yes. You can also use Mumu. Mumu is exactly like Tiger, the interface. I can't. Yes, you can use that. If we stay short for fastener dividend, okay, yeah. Good point. Yes, but check whether is it margin or not. Okay, if it's not margin, then you request for margin. So the dividend is on 26, and it's giving out 31 cents, which is like 2%. So I mean, I'm gonna eat the dividend lah. I'm okay to eat the dividend lah. Yes, they will take out as a cash lah. So whatever amount that you are shorting. Sorry, I'm using put option. So I don't think it's gonna. I mean, I'm not gonna pay cash lah. So I think put option I'm not affected lah. But I mean the price, the put option price will affect in a way lah. But I'm not giving out cash. So if you are short using shares, right, you just multiply 0.31 times the amount of share that you shorted, and then that's the amount of cash that will be taken out. But of course, maybe before 26, right, maybe like 24th, 25th, you are already in profit, like the price is somewhere here, then you just run off. you just run before the XD lah. And then after that, you can reshort again lah. Or if let's say it is somewhere at break even, right, you can, triggered. So this the kind of thing that you have to look out for, lor. I'm actually glad that this is coming back down. You know, I tell you yesterday, I don't know for whatever nonsense reason, it actually opened gap down. It opened gap down. I don't know why, because pre-market it was like gap up, and then it opened gap down, and then it shoot all the way up. So at 9:30, right? At 9:30, because yesterday I was giving my course. So at 9:30, I peeked at my handphone to see my account lah, my Tiger account on my handphone lah. And when I peeked, right, I saw my fast position. It is like plus $1,000. I was like, oh my god, plus $1,000. I was like, I was preparing for a negative lah. So when I quickly look at the chart, right, it gap up, gap down here. So I was like, okay, I mean, good lord. I mean, then half an hour later, I suddenly saw my position become minus $1,000. The price was all the way up there. It was so ridiculous. Let's look at S&P. Let's look at S&P. Okay, it's now minus 20 already. See, that's why very volatile. Very volatile. So don't try to be funny lah. Don't try to be funny with the market. And I can tell you, I won't be surprised if tomorrow morning I wake up, this whole thing is like at 4,500. It can happen also. Yes, no. Yes, I was when I was teaching, I was like, holy crap, guys, wait, let me like what's going on? What's going on here? I thought pre-market the whole thing gap up like 2%. Now I am like $1,000 in profit. Then after that I look at it, why is it from 1,000 become negative 1,000? It's like a 2,000 swing. I mean, it like I have my account is 100K lah, so 1,000 is like 1%, but still, I mean, to see that kind of swing, right, is a bit within like that 5 to 6 minutes is very, is ridiculous. It's ridiculous. Semiconductor. Okay, let's talk about semiconductor a bit also. Semiconductor seems like Taiwan Semicon wasn't able to save the market. TSM. Taiwan Semicon always like that one. They always like very nice result, gap up and then dive down, gap up and then dive down. So last time I was waiting for the cup and handle. There was a cup. I was waiting for the handle, but the handle become like that already. No more handle already. Okay, Nvidia still doing reasonably okay. I mean, the support is still there, but I'm a little worried for AMD. AMD broke through here already, and it's having a hard time going back up. It's truly having a hard time going back up. Amazon at 1.4, hopefully it will come back down. Hopefully it will come back down. It's gonna make my account very green. So Amazon, we are looking at 2008. Okay, we are looking at 2008. Of course, if it gap down until below here, then I'm very happy lah. So there's a lot more stuff going on in Amazon aside from the Rivian thing lah. I think the Rivian thing is pretty I would say pretty obvious based on their Q4 result. But there are a lot of internal issues within Amazon that is ongoing. Home builder diving again. So for home builder, right, they are slow and steady lah. Okay, these are not those high beta, those rocket counter that every day 4-5%, those kind. They are slow and steady, so let them be. So we also have some LNG related trade, and one of the trade is codename LNG, but it is also a slow and steady lah. Okay, we sort of like give it some time lah. Don't chong don't chong too much. The Chem Eco already chong quite a bit. This one everyday red candle, but the price is still going up. I'm not sure what's going on here also. Every day it will gap up like 3% and then close lower, then gap up again, close lower, gap up again, close to lower, and then I have like 5 red candles in a row, but actually it went up like 7-8% already. No idea what's going on. ADM quite okay also. Okay, so for those who are looking out for alternative of LNG, right? You can actually go for this also. You can actually go for EOG resources also. I think it's quite okay. I think it's quite okay. You see this big red volume candle here. You can put your stop loss below there, and then you wait for green candle come out. You enter lah. I think this trade should be quite okay. You can go for that. Peabody Energy definitely very good. Running crazy, running like crazy really. In fact, if you got it like somewhere here, right, on the day that we mentioned, it is up about 16% already. It's quite a big run. So you don't need tech counter to get gains like this lah. In fact, there are a lot of hidden stuff. Oh. And SC is something that we mentioned on our Facebook also. I think we mentioned on Facebook quite some time back. I was drawing this snake pattern. It broke down really, like it broke down really. You can consider this also. You can consider this. Is there anything else that is Wells Fargo is like diving. Oh no, so sad. Goldman Sachs going to close to yesterday closing already. BlackRock also close to yesterday closing already. Okay, let's take a look at Singapore stuff lah. Let's take a look at Singapore stuff. Prop next. Surprisingly, Singapore property market very strong. I have to admit lah, it's very strong. So what's working for US market in terms of housing and in terms of mortgage? Not really that factor in Singapore. I guess have to give Singapore government some props lah. The cooling measure kind of like make sure things are a little bit more stable. And unlike the US market, right, we already tightened our monetary policy quite a number of times lah. So in terms of all the inflation issue, whatever, right, we are relatively safe. Singapore, as someone who is living here, spending here, right, I think we are not as bad as what it is in US lah. And in terms of consumer spending wise, right, I believe we are more responsible in terms of spending lah. Because if you look at US folks, right, I tell you, their debt level cannot make it one. Very one. and also because we have CPF to pay for our housing, and then our debt to loan service ratio, all this kind of like protect us lah. So when we face with this kind of high inflation where almost everyone else is like doing very bad, right, we are somewhat okay lah. We are doing somewhat okay. So prop next, I will still take a look at it. It is still on my watch list, but I will not be doing any form of revenge shot for this position now. Okay, so recently all the palm oil counter chonging up left and right also. So I'm sure you guys saw the the shopping mall is like, I live in Punggol. I have not been to Waterway Point for 2 months already, because whenever I walk near there, it's like sardine can like that. Recently, all the agricultural counter shooting up. We have Bumitama Agri shooting up, First Resources shooting up, Golden Agri like went up and then taking a rest. Unfortunately, Wilma is slightly laggy. In fact, it came down quite a bit from the top lah. But this one, right? If you have this, right, not to worry so much. Watch out for this level. Okay, watch out for 4.5. In fact, it's very near lah. In fact, it's very near. I think if this one go below 4.5, right, then maybe I will consider getting out lah. But it depends on where you get this trade. For example, some of you got it from way early. For example, as early as last year, right? Somewhere here, right? If you got it like somewhere here, you are back to break even. You are kind of like back to break even. So you can kind of like hold on to it. if not, if you want to get out at break even, right, I think it is fine also. So it's truly up to you based on like how much can you risk, how big is your position is. But for those who enter with the earlier trade, right, you probably TP at 4.8 already lah. So it really depends on where you are entering. Then Semcorp industry is one counter that rally very aggressively. It is something that we always mention also, but we didn't really enter it lah. Well, when we want to enter, right, it's like a bit scared, a bit scared because chung too fast already. But of course, it's all right. It's all right. Most of the time, we are able to get other related counter like Rex International, RH Petrogas, Golden Energy, all these kind of stuff lah. So we don't really need to double down. Olam, I don't really like Olam. If I want to buy Olam, I will buy Wilmar instead. But now I don't even feel like buying Wilmar. So Olam definitely no lah. Currently, it's quite hard to, because it just get relisted. And this kind of price action, it remind me of those scam counter, IPO chung out, and then after that it will just go all the way down. So so if you want to buy, I can't tell you can go up or not. There's no way I can tell you it can go up or not. There's too little data here. But in terms of Olam, fundamentally, as a before Olam Group it was Olam International. And Olam International, right, fundamentally it is not a very good company lah. I would rather go for Wilmer in terms of fundamental rather than Olam. Jiutian, let's look at Jiutian. Looks like not bad. Where's my volume? Looks not bad. Actually, looks quite okay. Looks quite okay. I will consider this more like a speculative play, but looks quite okay. It is something like this. Wait. You have a trend line breakout. And then you also have a resistance breakout. And then it even gives you a lower high here. So if you want to buy that, I think your stop loss need to be somewhere here lah. Maybe 0.75. 0.75. It is a bit far, a bit far. But you need to be below here. You definitely need to be below here. If not, it can come down like that, go up one. Then if your stop loss is here, you are gone already. You need to prepare for that possibility where it come down and go up like that, which is very common. I tell you, in golden energy, you see this kind of nonsense. You see this kind of nonsense. It's very common. It's extremely common. Or even in Rex International. Even in Rex International. Like you buy this breakout. Imagine you buy this breakout. It will come down, take you out, and then rally. So your stop loss need to be like below this point. And in terms of 9天, right, your stop loss need to be below here lah. So make sure you go and calculate if your stop loss is there, how much can you lose, and then you enter, and then you just leave it there. Don't bother too much really. If you are the kind that enter big, and then your stop loss is like just a few points here, then most of the time, right, it's very hard for you to make profit. You can only make profit if the stock immediately shoots up. And even if it immediately shoots up, right, most of the time you won't be able to get the whole thing lah. It shoots up a bit, you scared, and then you run with your profit already. So even if the stock shoots up like that, right, you can end up like exiting here without really holding the whole way. So normally what I do is I just go and find where can I place my stop loss, I calculate my risk, and then I just hold the entire thing lah. I don't really care really. And then eventually if I see, like even if it retrace a bit, right, what I normally do is if let's say I'm able to get this amount of gain, normally what I do is I shift my stop loss lah. I shift my stop loss so that even if it comes all the way down, right, I still get a bit of profit. But if not, I can continue to capture the profit. So usually you can get a lot of profit in a big run. Actually, the hourglass is the hourglass is doing surprisingly well. Surprisingly well, but it does show a little bit of rolling over. I think it's gonna go sideways. So for those who got this, right, for those who got this previously, don't add some more already lah. Don't add some more already. Don't add some more already. I think let it go lah. Let it go. Fortress Mineral is another counter that we are looking at. You can see that I placed an alert at 50-cent level because I'm waiting for that big breakout like golden energy like that. Big breakout. So for golden energy, the alert went off here lah, and then we managed to. I mean, I don't know who managed to enter lah. I personally did not enter lah, but I did send out a trade setup there. Geo energy also taking a break. Seems like still going up, but taking a break. So depend on which one you want to go. You want to go for geo energy can, golden energy also can, or the P-body also can from the US side. Okay, let's take a look at US a bit to see what's going on. Everything rate ready. Everything rate ready. Wells Fargo recover a bit. Morgan Stanley recover a bit. Maybe not so rate ready. Okay lah, still rate. So let's look at the sector. Just now we talked about sector, but I didn't manage to look at it. Up ETF. Cathy Wood, our mama Cathy Wood, the price is now back to below COVID-19 low already. All the Palantir lemonade people all here lah. All the back holders. Uranium ETF. So can look at uranium ETF also. Sometimes it will let you know your uranium counter price lah. So sometimes I will look at the sector ETF and then I see which one doing well and then I go for that particular one lah. So actually uranium energy came out on the scanner. So this one like doing much better than the chemical that we have. A little bit more aggressive lah. So I think those who have not their uranium counter, right? Maybe you can take a look at this, but I don't know where you can place your stop loss lah. Okay, so you go and work out yourself. I already got chemical, so I'm not gonna look at UEC. In fact, I put a pink color tag there in case it kind of like. How about UUU? UUU also breaking out already. But one thing you have to know, all this counter, the operating margin is like, they are not making profit at all. So it's like a very speculative play. X has been nuts. Oh yeah, let's look at X. If X has been nuts, right, then Fortress Mineral should rally. Hey, if this one rally nice, actually, if this one break out, quite nice. I'm gonna put my alert there. Okay. Wow, crazy Larry. Crazy rally. Accidentally say crazy Larry. I hope no one is named Larry here. Cannabis not really. Actually the other day I shorted Tilray. I actually shorted Tilray. Alcoa, let's look at AA. Aluminum. Yeah, this one I was looking at it also, but I remove it because I will lump this together with all the Russia conflict counters lah, Russia related counters, and it's like I got too many Russia conflict counters already. I got soft commodity, uranium, LNG, and then now add another aluminum. But okay, I can take I can monitor this though. So for those who don't have, right, can consider lah, can consider. Earnings is coming out. Tilray. Yeah, the other day, the other day I shorted Tilray here. And then I didn't manage to TP. And then it shoot up. And then I got cut off. And then after that, it came all the way down. I was right in my direction, but I was at the wrong time. But all the cannabis stuff, I wouldn't go for them. I hardly go for meme counter. I hardly go for meme counter. If they want to rally 100%, right, let them be. If they want to rally 100%, let them be. It's okay. I don't mind missing this kind of stuff because it's too much. It's too much. It's very risky because like for GameStop also, they want a stock split. Like split what? Yeah. and it's like this count, and you can't do any form of analysis. Like if you do a fundamental analysis on this, there's nothing good about it. If you want to play the technical, it kind of like quite hard also because any news about stock split, this whole thing should like fly out like don't know until when. And you know there was a point where the call option on this counter, it actually exceeded the entire market cap. And it's like if everyone exercise all the options, right, then there's not enough share to go around. And you know, I don't know lah. I mean, I only found that out quite a while later when someone was, I mean, bringing it up. So it's very technical very technical on you need to look at all the short interest all the option expiry. And then the funny thing is there is this counter called bird. Yeah, it's called bird. All bird. And all bird, right? All bird is actually one of the counters that has a very high short interest rate, ridiculously high short interest rate. Floating short interest okay. Then because of that, a lot of people are trying to buy this counter simply because they think that it can rally like GameStop, like a major short squeeze. And they have been buying from like here until here. There's haven't any short squeeze yet. I mean, eventually you become a back holder and pray for a short squeeze but I don't know . So all these kind of meme counter, the analysis and the entry is out of my, holy crap, fastener down by 2.29%. It's below my entry already. Okay, hopefully it go down some more. Sorry, let me Global Foundries. Okay, let's look at Global Foundries. Global Foundry is the am I spelling things wrongly? Can you give me the code? Oh, sorry. GFS, right? GFS, Global Foundry. Sorry, I'm from Myanmar. My English education not very good. This one? Is it this one? This kind of counters, I see the chart, I close already. I wouldn't even want to do research on this because it's like bottom picking It's like bottom picking, and currently the entire chip industry is like doing quite bad. In order for me to bottom pick a counter, right, there are certain things that have to be met. Well, for example, let me show you the kind of counters that I bottom pick. Let's look at golden energy okay. So for golden energy, right, thank God we have all this. Okay, we bottom pick at 30 cents. We bottom pick at 30 cents, which was like back in July 21. So when was it? It was here, July 1st. It was here. Okay, so at least the counter need to give me a sign of life that that buyers are coming in. So if I see that kind of one straight down, I will be like, oh, okay, no. So I mean, not to judge people. So when I see request analysis for counter like that, right? The first thing that will come into my mind is I think you are stuck somewhere at the top and you have not stop loss yet. So the first thing I will ask is, are you stuck at the top and where is your stop loss? So yeah. The US airline. Okay, yesterday Delta have a very strong result and it is like going quite resilient. But because right, in terms of counters like this, right, you can, like, from one look at the chart, you can kind of see that it is very choppy movement, extremely choppy movement, and it is like somewhere at the top already. Let's look at United Airlines. The chart is similar. Okay, so if you go into a chart with this kind of pattern, right, excuse me, most likely it is gonna remain in that pattern, and then you're you're gonna get caught in a sideways movement that is heading downwards lah. So I think even with the good result, it is not the kind of chart that I would like to trade lah. Especially when you look at US market, that is like 10 over thousands of charts and industry that you can look at. So I'll rather trade Hershey or Bunch Limited or Tyson or General Mills rather than something that like this. And even if we can like break out here, right? Even if we can break out here, who knows what's gonna happen? Then suddenly later the oil price shoot up again, and then you have the whole thing coming down. So I like to look at things that are simple to analyze, because airline, right, is very susceptible to oil price, which in turn is very sensitive to geopolitical issue. And these are things that you have no control over. No matter how good you analyze the fundamental or you play the chart, right? Something happened at Russia side there, or the suddenly there's peace, and then the whole thing will be upside down. SkyWest, let's look at SkyWest. I've been sneezing since like 1 month back. Thank you. SkyWest. This one also in a long-term downtrend. So we I don't pick I don't pick bottom lah, but I mean this one's still okay. This one's still okay. This one is showing some form of life. At least got a bit of a lower high there. But I will want for it to break out here lah. I want for it to break out here. I mean, normally when we trade, right, we tend to capture about 15% to 20% or sometimes even 30% lah. We try to capture this amount of profit. So if let's say I'm looking at a potential 10% or sometimes 5%, like I rather not take the trade lah. And it's like, if let's say it hit the profit, right, then you often will be very scared. Hey, what if suddenly come back down because resistant? So even if it hit the profit, right, you will feel very scared to hold further on. And if you look at it compared to, let's say, Archer Daniel Miller, right, even if it hit my profit, I can just simply shift my stop loss and I will confidently hold on to it, because there's no resistance. It will keep going up and up and up. And even if it retrace, right, it will probably be a short-term retrace. So that's why I will always go for this kind of counters, because you don't need to have a very tight stop loss to kind of like artificially broaden your risk-reward ratio. And then even if you hit the TP, right, you can still hang on to your position because it is still going up, and you will usually get a way better risk reward ratio than you plan out, compared to another situation where you purposely have a tight stop loss and a very aggressive profit just to have a good risk to reward ratio, but end up you exit early, you don't scared to hold, you scared to hold beyond the TP, end up your risk reward ratio is way worse than what you want it to be like. So normally I tend to go for this kind of chart. My my trading rule is always been buy high, sell higher, even when the market is going down, right? Buy high, sell higher, sell low and buy back even lower for the short positions. So for the short position, you will see things like Rivian, or you will see things like okay lah, maybe it's not Snowflake, not so much lah, but it is still a breakdown lah. It is still a breakdown. Or Starbucks also, it is still a breakdown. So I'm not gonna try to like I don't know, I'm not gonna try to short here and then try to get this little bit and then after that quickly run, and then the whole thing is still in an uptrend. Citigroup still doing okay. Yeah, it's coming back now already. PayPal very sad. PayPal very sad case. The CEO is leaving to somewhere. PayPal is like it's a disappointing, such a disappointing stock. Let's go back to the Coinbase. Let's look at Coinbase also. Coinbase also jialat. Yeah. Recently, I'm doing homework on Shopify, but the reason I'm doing homework on Shopify is because I'm using it as an example for my course lah. They are going to learn how to pick stock. But as I was looking at it, right, it does seems like a good counter to short, but I'm gonna put it in my watch list first lah, because the time to short is already over. It's going down already, so maybe I might be too late. Yeah, correct. That's another thing. It's gonna stock split in July, so have to be careful a bit about shorting this also. Thanks for bringing it up. Costco is surprisingly resilient. Unfortunately for us, Costco is those hit our stop loss and then went up lah. So this one very sad case lah. I personally was cut off also. It was last year. Touch and go. Let's look back at the index. The index still quite resilient, But I can tell you most of the action they come towards the end of the day, like 4 a.m. in the morning, and then they start to jump down or jump up, or don't know what's going on. Natural gas is green. Natural gas has been rallying, but our counters is still stuck there. Give them time lah. Give them time. Consumer discretionary, one of the sector that good for shopping during this kind of period. Consumer staple, if you look at it, very obvious. It's the good sector to long. Go and find which counters are in consumer staple you can long. Costco is in consumer staple. Energy sector, the best performing sector for the year. No question asked. Financial is like one of the underperforming sector for the year lah. Has been going down quite jialat. In fact, they try to rally before the bank earning. They try to rally a bit before the bank earning. I think here was short covering. Here was all the short covering taking place to reduce the risk before the bank's earning come lah. But now everyone back to selling down again. Industrial also so. Tech sector, one of the worst performing for this year lah. This one, no question asked lah. Utilities, the most defensive counters, the most defensive sector, along with consumer staples. So if you are looking which one to long in this kind of environment, you have all these sectors. Home builders, definitely one of the worst. One of the worst. That's why we are short. Russell 2000 surviving well, but the other time I mentioned that this is probably the top for now. And then I even put a alert there in case I'm wrong. then I will know. So if you are those if you want a short Russell 2000, right? I think you can short, but you might get stuck. But I hope that eventually it will dive down. Eventually it will dive down. From what I read, right, it is in the process of crashing, but haven't crashed yet. It is in the process, but there has been a lot of foreclosure. There has been a huge reduction in mortgage application. Chinese EV counter, okay, even though like 我是一半的华人 but I'm not a big fan of Chinese EV. Mainly because of the chart itself lah. And not just the chart, they are very susceptible to factory shutdown. Like suddenly zero COVID policy, some factory get shut down. Like new it gets shut down, and then after that you have all the policy change, like China want to support the stock market, then everything rally, and then suddenly shut down, and then suddenly this regulation, that regulation. If I can tell you that aside from Tesla, right, even maybe Tesla also, EV is I would say it's a bubble. It's a bubble that already popped, and it's very clear that everything is coming down. New, Expand, Nikola, Rivian. The other one is Lucid. Tesla is the outlier. Tesla is the daredevil that spearheaded the whole EV thing. And because they are the one that took the risk, they set up all the infrastructure, all the manufacturing factory, gigafactory, they set up everything nicely. That Elon Musk planned this from like don't know how many years back, when everyone have doubt that Tesla cannot be profitable, right? They plan out everything ready, and because of that, definitely Tesla enjoy the reward. But all the copycat after Tesla, like Nikola, right? They even fake their EV truck. Their EV truck is not working. They cheat their customer. And then Rivian, when they IPO, right, they don't even have a working model. They haven't even produced a single vehicle. And then I'm not sure about Lucid also, but everyone is trying to ride on this EV thing because they are praying that the next Tesla will happen, and then they can be like multi-billionaire within a short period. But that era is over. If you are looking to be a new investor because you want to be like big billionaire, right, or you want to like that kind of rally, that rally is over. It already happened. So what's happening now is all the selling happening, and you don't want to be that guy that like hope that this will happen one day, and then you go and buy here and it never happened, and it's gonna like up down, then eventually like a slow death like that. I mean, all the Palantir holders lah, all the Palantir holders lah, like everyone buying here, because they believe in the company, this and that, because they hope that it will come back to $40, but it won't go back lah. It won't go back. It probably won't go back within a time frame that is advantageous to you. Maybe it will go back, but that will be like 50 years later, who knows, where your money stuck there until like even if it goes back, right, your money could have been in somewhere else where it could have gotten you a lot more profit lah. So yeah, so like for me, it's the biggest reason why I short Rivian. The moment I look at Rivian, I see this they are not even, they don't even have revenue. They don't even have revenue. Okay, maybe for this here there's some revenue lah. But previously when I was shorting this, this doesn't have a revenue. And because it doesn't have revenue, oh my God, this company has a bigger market cap than Ford. It has a bigger market cap than General Motors. And they don't make a single car. What is going on? I'm definitely going to short this. So I shorted somewhere here lah. And in terms of fundamental aspect also, right? If you look at EV, currently all the materials that we require for EV, like lithium, palladium, all this, right? Is quite hard to get lah. The price are very high. And when the price are very high, right, it's gonna eat into their profit margin, which is now already quite bad. Vertex. Let's look at Vertex. RTX. Pharma counter. Wait, sorry, let me look at Vertex first. I think Vertex came out earlier, but I skipped it. Vertex Pharmaceutical. Whoa, what happened? I have no idea what this is. Is this the biotech? Health technology. Okay, so I'll admit something also. Health technology and biotech counters are some industry that I avoid because they are very sensitive to news. Like FDA something, then shoot up like 100%. Or suddenly they shoot up and then FDA say cannot, then they went down again. So I tend to avoid very news sensitive counters lah. And for those who like know me like way before, right? I actually work in a pharma industry, Roche. I worked there for about 6 years. Before Roche, I was in another pharma industry, and I mean, I got a little bit of background on all these FDA stuff, and they are very I would say like whether a counter gonna shoot up, shoot down really depend on FDA wanna approve or whatever lah. And then suddenly you have some counters get up, get down. So even counters like Pfizer, Moderna, right? I'm like a bit hesitant to trade lah, because if even like I tend to prefer counters that I can easily analyze. So maybe if I'm trading Moderna or Pfizer, right, most likely I'm chasing a momentum or I'm chasing a trend. But when I'm chasing all this trend, right, I'm always fearful that tomorrow later the FDA announce something and then then the whole thing gonna get down. I have always been in pharma industry for very long time. I work at quality control specialist lah. So I do all the chemistry and bio related lab work. But trading is in the past is my pastime lah. So I started trading in 2013, 2014, and initially started off as a investor. I was trying to invest in some Singapore government bond that give me like 2.5%, 2.6% interest rate. I thought 0.1% rate more than CPF, so I tried to go for it. And then I was forced to sign up a trading account, a CDB account. Then after that, since I got access to CDB account, I might as well explore, and then from there started trading. Then initially got addicted to trading by chasing all the nonsense stuff back in 2014, 2015 like that. I'm sure you're familiar during that period also lah. All the Blue Mon, Asiasan, Lion Go, all those nonsense. Wood. And then in 2014-15 I lost like 30K. Back then I was 25 years old only. I save up 20K for 2 years. Like my friends are going overseas like happily holiday. I'm saving like $200 per month for 2 years to save up 20K, and then I lose that 20K within like the next 1.5 years I started trading. And then from 2014 onwards, after I lose most of my savings, right, I decide to be okay. Let's not chase all the pennies and all the nonsense. I can't remember what are all the other pennies during back then. There was some railway company, Midas. Was it Midas? I know people stuck in Midas. Then some yeah, Midas, correct. then a lot. I can't remember already. There's a lot of nonsense lah. I think got China fishery also. China China fishery also. Yeah, all those stuff lah. The pork company. Yeah, I know got some pork company also. So those are the good old days, man. I tell you, the hardware zone there. And Chasen, I still remember Chasen. Is it still listed or not? Oh, it's still listed. Oh my god, it's still listed. Chasen, Sino Grandes always like scam people, want a dual listing and then shoot up until don't know where. Then they drop until like that. Yoma also. Then Tiger Airway also. Tiger Airway also scam people. Suddenly gonna privatize at, I think, way lower value than what they IPO. Yoma also a lot of nonsense, counters. Those are the good old days, man. Here I was very active here. Then there was this VAT, the shipping company VAT. Nowhere to be found already. Nowhere to be found already. Yeah. So I mean, I was active during this period lah. I was active during this period, and then during this period, I lost $20,000. Then after that, I decide to like, okay, maybe I should learn properly how to trade instead of YOLO here and there. And then eventually, when I sort of learn the proper process by trial and error through a lot of reading and internet, right? I thought that, hey, actually, if you do it properly, right, it's quite profitable lah. It's quite profitable, and I enjoy the learning process also lah. So along that period from like 2015 all the way until now, right, I was quite active on Facebook, and then a lot of people text me lah or ask for my analysis, this and that, and then eventually I am here lor. Yeah lor. And then I joined Sonic R also. Also they are mainly forex and crypto traders, but I'm usually there to provide analysis for stocks also lah, because some of the traders there, they quite interested in stock. So I joined them during 2018 as a sort of like a stock consultant. Recovering a bit, just a bit. Wait, I want to check my fastener. What's my fastener doing? Kind of like halfway there. Okay, wait, RTX. Raytheon aerospace defense. Oh, okay, not bad. Yeah, this one can be those defensive counter also lah, along with the Lockheed also. Patriot is missile. Wow. Okay. The one that they are sending to Ukraine one, is it? Not bad. Oh yeah, talking about pharma company, right? Recently I was looking at AbbVie, mainly because some of my Roche colleague in the past. They are working in FV also. And then when I was looking at it, I was like, oh my God, what's with this rally? But currently retracing lah. So who knows, maybe if you want to buy this engulfing, up to you. But I personally will not go for it. Rally so much already. The other day I was actually looking at Pfizer also. I was thinking of going for this breakout, but it come back down here lah. Then a bit no kick already. Okay, let's go and take a look at every I don't know, like I can't find SL lah. Like if you wanna go for this, right? If you wanna go for this, then I'll just SL somewhere here lah. Like if it continue to dive, then swallow. So this one is more like bottom picking the retracement lah. Bottom picking the retracement. And they just given out dividend also. They just given out dividend yesterday also. So I think after the XD now, there are buyers coming in. I have no idea. I have no idea how it works. Let's go look at Wall Street bets. We like to look at all the nonsense stuff happening in Wall Street bets lah. Firstly, it's like good entertainment. Secondly, sometimes we can find good counters from there. It's not that we are following what they are buying, but it just gives us exposure to certain counters that we don't know lah. Teams will turn down $5,000 from Elon Musk to shut down Twitter account tracking. Says he get too much work satisfaction. Okay. Twitter is a private company. It can do what it wants. This one damn lame. Do people not see the synergy potential between Tesla, SpaceX, Starlink, Twitter, and free speech? Is SpaceX listed? Is Starlink even listed? No, it's not even listed. What is he talking about? AMT, who hurt you? Mama Su need a safe word. Python halted. Python halted. Oh, really? Oh, okay. I didn't notice that. Concrete bond. What's bond? Oh, natural gas. Is this like the ETF? I think it's an ETF. How's our why is our chemical rate? Hey, at least our LNG is up 2%. Slow and steady. But Archer Daniel Millen chonging, yeah. Not sure why is it chonging though, but it's good that like the fertilizer also chonging. The fertilizer counter also going up. Amazon need to close at least like here so that I can sleep in peace. Twitter will hold employee meeting at 5 p.m. Eastern time. But I mean, if you think about it, right? How would it feel to be a Twitter employee right now? It's like, will you be scared that you might lose your job if we go privatize or what? Nasdaq and Kong correlation is too strong. If Kong bounce, puts get blown out of the water. NVDA is rushing below 216. NVDA going to 0. Mortgage rate hit 5% for the first time since 2011. Yeah, so you can see all the like okay, some stuff here you can tell is serious lah, but good to double check. Okay, good to go and double check a bit because it's Wall Street bets, right? You don't want to take things for granted there. Let's go and double check. Where's my mortgage rate? Haven't hit 5% yet, but this one a bit delay. This one a bit delay because I believe they release every month, so have to wait for the data to come out. Rotation from tech to exotic hamsters. ALLY too cheap. Ford Death Cross. Okay, let's look at Ford Death Cross. What's going on with Ford Death Cross? So Death Cross mean buy or sell. And what's the okay? I'm just gonna put all the random lengths. Oops. The Death Cross was here what? So long ago. 50 cross 200. Okay. Excuse me. Oh, okay. So means buy. Is it? I don't I have no idea how Death Cross works. That time I got one friend tell me Death Cross, S&P Death Cross, you should buy. Then I always think I thought Death Cross means bearish, so it's a contrarian play or what. I mean I don't use all these indicator lah. Means sell lah. Golden okay. Golden cross is from below, right? I see. Okay, thank you. It's like taking technical lesson 101 here. But I got someone always tell me that if Death Cross, right, can rebound and then go down. I don't know lah. I don't know. Crazy though. But it is quite a steep cross. Twitter puts free money. let's look at Twitter. Maybe really free money, and then we can do some YOLO trade. Where's my Twitter? Yeah, it does seem like free money. But I have to be careful though, because Elon Musk buyout is at $54. $54. If really goes through, then this one will shoot up. FL is the only green in the sea of red. Really? Foot Locker and Nike jumping. AMD making me a bottom. AMD bottom ready. Really? Let's take a look. Far from bottom lah. All these people, I don't know what they're talking. Maybe they bottom in like 1 minute time frame. Yeah, they are talking about 15-minute, 1 minute time frame. Netflix, okay, Netflix, I think it's gonna be bad. I think it's going to be bad because they are gonna lose all the Russia subscriber. So this level, right? This level is where they actually lost quite a bit of subscriber. And then after that, it recovered a bit, but I think when the earnings come out, it is going to be bad. It is just that maybe price dropped so low enough that it might recover a bit, but I wouldn't bet on it. I wouldn't bet on it. You have to be very careful about counters like this, right? Because there's a very good reason why it gap down so much. And sometimes this kind of gap down, right, you should not be taking the risk to chase. For example, Facebook gap down. If you look at Facebook gap down, right, it gaps down because number one, they have, for the first time, they actually have decrease in daily user count, and on top of that, right, they have some issues with the advertising lah, because Tim Cook and Apple screw them over. Now in order to do target advertising on iPhones, right, they need permission from the iPhone user lah. And after that, I think Android also putting in the similar function where it is not a default option. The user can choose whether they want to opt out from the targeting. So all this, right, all these affect the fundamental very drastically, and they probably cannot recover until they manage to find something new lah, which is why now Mark Zuckerberg is like doing NFT lah, he's doing what, the Zup buck, I don't like online currency, and then he's pouring a lot of money into all his meta stuff, so he's in that desperate mode lah. And then similarly, right, if you look at PayPal, the gap down here is for a very, very good reason also. And I can tell you that, like, maybe at this point, if you are looking at PayPal at this point, right, you might think that, hey, support ready lah, confirm go up ready. I buy this gap down lah, confirm can play back. And then and then what's gonna happen is it's just gonna dive some more. And the chances of Netflix getting into that is very, very high, because if you look at a streaming service like Netflix, right, and if you compare it to Disney like that, like Disney Plus, which is a direct competitor of Netflix, and they are getting like a lot more subscription there now, and it is only a small part of Disney's business process. They have all the production studios. They can make their own movie, but if Netflix want to make its own shows or what, right, they require a lot more capital upfront lah. So in terms of the pure business structure itself, right, it's very non-competitive, and it kind of hit the peak somewhere here lah. I believe it hit the peak somewhere here already lah. So unless they do something drastic change where they get to they get some revenue from somewhere else, right, I think the current business nature of Netflix is not going to make the share price recover anytime soon. And if you consider right now, a lot of people are traveling already. They are not they are not sitting at home watching Netflix already. They are traveling like the world is opening lah. So they're not really don't really have a very good opinion on it. Rotation into tickers that start with a B to F. Fell for another P and D. Oh, pump and down. I get horny when I look. I thought market was closing early today, but Google say it's normal day. Market will close tomorrow. Apple, Microsoft, blue chip stocks vertical down. We will recover. This is ridiculous. A little bit of a bear flag on 50, 50 when it dropped, zoom out. But things are recovering though. Things are recovering. Look at how much Wells Fargo recover. But at the same time, Goldman Sachs is dropping. Morgan Stanley recovering. PayPal still dead. PayPal is still dead. Nike is up 4.5%. What's going on with Nike? Tech are still down. Tesla is leading the drop. Tesla is leading the drop, 3.3%. 11. Uptake in the latest consumer survey. The University of don't know what Michigan survey. I think I got it. Let's check. UMSCI. Is it this one? Excuse me. Michigan consumer sentiment. Oh, that's such a big expectation beats 59. Finally, it's going up a bit. Yeah, it was down quite bad from like 2000. Why people placing some artificial top on 10-year yield? Inflation is about to get significantly worse. Oh my god, this market need to pick a direction. So this one very common. This one very common. A lot of people are buying weekly options, and they are stuck because the market is like going left, right, but not in a direction. Maybe it might be a good time to sell options while the market dilly-dally, right, just collect the premium. Target and Costco don't give a two hoot about what SPY is doing. Oh yeah, let's look at Target. Since we are looking at Costco, so maybe Target is doing something. What's the time now? 11:16 already. We should end soon. Reverse head and shoulder. Maybe can play. Who knows? Have to do homework though. BAC in a mood to dump today. Let's look at BAC. Holy crap, this is like flirting with the support. And I think this is quite a crucial support, I believe. I think earnings next week, right? This one earnings next week or earnings after today's market. Yeah, this is very dangerously low. I think given what happened to JP Morgan and Wells Fargo, right? I'm kind of like a little bit worried. Depend on what you are looking at. Like, are you looking to trade or are you looking to like buy and hold? Oh, all my shorts are red and all my longs are green. That's good. Not all are, some. But recently I saw the bank like topping out like that. A bit dangerous, leh. A bit dangerous. Because you lost the support here already. You lost the support here. And this one is like making a lower high. Like a bit of a lower high. So this is this is in the process of going down. So what you do not want to do is you don't want to go and catch this in the process of going down. You want to wait for this kind of reversal pattern. At least wait for a very clear-cut green candle like this that comes up lah, and then you enter. But this one, I believe it can dive down some more lah. There was a dividend payout, but even after the dividend payout, price is dropping. So probably people get the dividend ready, then start to dump ready. OCBC is worse, man. OCBC is like resistant there, and there's a big gap now. You'll be also in a similar situation. Try to recover, but going down. I think now banks are facing pressure lah. Banks are facing a bit of pressure. I mean, you let them go down first. No reason to chase this. When we see a very clear reversal like this, then you can buy lah. Because the other day I was looking at STI and it wasn't it wasn't very it doesn't look nice lah. It doesn't look nice mainly because you like it always try to close this gap, but keep rejected. I mean, STI is like banks lah. they are typically just 3 banks. Yeah, I think banks can avoid for now, because if things start to get worse, right? It can dive lah. It can dive. I mean, I think like even though our inflation here not so bad, but I believe we are facing some level of inflation also. That day I went to buy 1 tray of eggs, right? Walao, $4 plus leh. Like siao eh. Like 10 years back, I can go to mama shop, 10 egg, I choose myself like 90 cents get ready. Now it's like 1 tray $4 plus. Fast is still doing sideways. It's still doing sideways. Yeah, strawberry also so expensive. Okay lah, this one I just let it be lah. My option expire on May 20, so I'm gonna just hold until May 20. And then whether it expire with profit or it expire with like zero, I'll just let it be. For options, right? Not really recommended stop loss, because I mean option itself is very cheap. So you just buy the amount that you are willing to lose. So I got $1,000 worth of options. So if this one goes to zero, right, I lose $1,000, and $1,000 is my risk loss. But if it goes to like maybe 52, then this option can become $2,000 lah. Then I will get like either I lose 1,000 or I get 1,000, or maybe if it goes lower, right, I can get $2,000 profit. So is, I mean, it regardless what happened, right, I'm gonna lose 1,000 at most lah. So my risk is like fixed there already. Or if let's say I can only lose $500, that is my risk, right? Then I will just buy $500 worth of option lor. So I don't need to care so much lah. Sometimes option is good when, like, let's say if it can suddenly gap up, right? Then no matter what happened, your option, you are still going to lose that amount anyway, whatever happened to the price, whether be it gap up, gap down, go sideways, the company gonna privatize or whatever, your $500 option or $1,000, that's the most you are going to lose. Yeah, so in certain cases, option can be a better play. Sometimes shorting is a better play, because sometimes, right, if for example, right, if I hold the option until May 20, then at May 20 my option expire, then my option become like zero, then I lose the entire 1,000. And then in June, this whole thing start to go all the way down, then I missed the trade lah. Even though I was right, my option expire before the price goes down. so the timing there is quite sensitive lah. You want to learn option lah. Unfortunately, I'm not a very pro option player. I only do very basic, like I either straight away buy or sell put. I mean, I always go for call option, put option, very simple. If then the most complicated one I do are like ratio spread or sometimes calendar spread. But this kind of thing, Tiger very hard to do unless you have a very big margin. If not, Tiger very hard to do all the higher level of option strategy lah. But most of the time, I just if I'm looking to short, then I buy put lor. If I'm looking to buy, I just buy call. But I don't always buy options. Sometimes it is better to buy the stock itself. So it is very dependent on the situation. It's not always that everything can options lah. So sometimes buying or shorting the actual shares have better advantage for you, especially in terms of timing wise. If you cannot predict the timeline, then you might as well buy the actual share instead and then just hold. Finally moving like a tiny bit, like a tiny bit. But Peabody doing very well though. Peabody doing very well. Mosaic also doing very well. Chemical, so many reds, yeah, so many red candles. Okay, guys, we are hitting 10:30 already. I am quite surprised that there are still 35 people of you still here. So I'll be ending the session. Okay, so tomorrow there won't be a session since market is closed, but we will have our usual Saturday webinar lah. So unfortunately, Saturday webinar is for our subscriber only lah. Okay, so I do hope that for those who are first timer here, even if you don't join the subscriber or whatever, right? I mean, it does sort of give you information on what the market condition is going to be, and hopefully you have some idea on how to plan out your trade in the long run lah, but rather than just blindly buying left and right and don't know what's going on with the market itself. Okay, so long weekend, have a good weekend everyone, and have a good night folks. Bye bye. This session is recorded. I will upload it publicly, okay, so that everyone can take a look at it. Good night.